Coronavirus for China is a bitter pill to swallow. No, so Chinese policymakers have implemented a raft of measures to support an economy downturn by a coronavirus outbreak that is expected to have a devastating impact on first quarter growth. Actually, China initially planned for growth of about 6.1% this year, though. Economists have already tempered hopes as the virus death toll continues to rise. In short, some analysts predict that the things will get worsened. Therefore, IDX research team has gathered China economic growth projections through some analytics. Let's see the next graphic. This is China economic growth projection by China's government before the coronavirus outbreak case come to the surface. They kind of predicted for China's GDP as much as 6.1%. But after the coronavirus case outbreak come to the surface, Moody's, Bloomberg, EIU, and S&P Global had evaluated their kind of projection towards China's GDP. Moody's changed their prediction on China's economy as much as 5.8%. Bloomberg 5.8%, S&P 5%, and EIU 5.4%. This is clearly belt-tightening moment for China as coronavirus hit the economy so hard. Here we can easily see the symptoms. Head of the Trade Ministry's Agency for Trade Assessment and Development, Kassan Muhri, revealed that 6 countries had released their export-import to China's data in January 2020. These including Brazil, Vietnam, Chile, Pakistan, and South Korea. According to Kassan, all these countries have experienced decline in exports and imports since the outbreak of the coronavirus in China. Too bad, Central Bureau of Statistics of Indonesia haven't released Indonesia's China's export-import condition in January 2020. But apparently, Ministry of Finance, through Trade Assessment and Development Division, has forecasted that Indonesia will experience downturn in Indonesia's GDP. About the forecast, World Bank also gives its projection as well about Indonesia's economic performance, considering that China experienced decline in its economic growth. To see the forecast, let's see the next data. This is low China's GDP impacts on Indonesia. If China's GDP decrease as much as 1%, the effect on Indonesia's GDP, according to BPPP, is projection as much as 0.23%. And World Bank's projection of Indonesia's GDP affected by decreasing China's GDP as much as 0.3%. The forecast has been through many assessments and considerations, including many measurements. However, the country's target for 2020 is scheduled to be announced in March. For your information, China's economy grew 6.1% in 2019, just landing within its intended window of 6% to 6.5%. As China is Indonesia's biggest trading partner and top export destination, with $28 billion in export last year alone, Indonesia is ripping off moment as well. There are several sectors that get impacted amidst coronavirus spread to Indonesia. Let's check the next data. This is the list of sectors that, predicted to get affected by the coronavirus outbreak in China. The first one is tourism, of course, since tourists from China that coming in to Indonesia as much as 20 million people. Investment sector also will be affected by the case. Oil and gas also. Trade will also experience pretty much the same thing. Hot issue lays on trade sector in which Indonesia has banned live animal imports from China amid fears of the spread of coronavirus. But there are detrimental effects on the economy. In fact, shortage of garlic caused its price to skyrocket more than 40% to 50,000 rupiah from around 35,000 rupiah in a week earlier. Indonesia indeed suffers, but don't forget that other countries also attach to China's economy as well. But actually, there are potential ways to fix this global fragility. Let's take a look from the side of China's central bank, or so-called the People's Bank of China. Central bank is attempting to restore investor confidence as global markets shudder at the potentially damaging impact on the virus on world growth. To the next graphic, we can see some fiscal and monetary policies put in place by the government and the central bank since the outbreak. This is the list of monetary policies to restore investor confidence that had been or planning to be implemented by People's Bank of China. The first one is pumped in 1.7 trillion yuan, or as much as $242.74 billion US dollar through open market operations, lending 300 billion yuan from the PBOC to commercial banks and cap rates on loan at 3.15%. Not only China's central bank, China's Ministry of Finance also take measurable attempts. The Chinese government is eyeing additional actions to stimulate recovery and encourage consumer spending. Some measures under consideration include the sale of government bonds and a higher limit on the country's budget deficit to GDP ratio. What are those? Let's see the next data. This is China's finance ministry attempt to restore investor confidence. The first one is allocated 7.85 billion US dollar, billion yuan to fight the virus. Materials directly used for epidemic control will be exempt from import tariffs, and China's bond market regulators supports debt financing and debt issuance. In terms of exempt import tariffs, China's finance ministry indeed put so many efforts. China's finance ministry said materials directly used for epidemic control will be exempt from import tariffs from Jan 1st to March 31st. Imports of donation, including ambulance and disinfectant products, will also be exempt from the tariffs, value-added tax, and consumption tax. On the other hand, the National Association of Financial Market Institutional Investors also said it would support companies that have participated in containing the spread of the virus. The association also said it would allow virus-hit firms to issue bonds and raise funds via other instruments, including asset-backed notes. And stay tuned on Market Headlines, because we'll be right back after the break.